What's up, everyone? Keith here. Are you a first-time home buyer that has eagerly awaited the president's new first-time home buyer program? Well, you're not alone. I've been anxious about the details myself, and the most popular home in the country, the White House, has recently made the details public, and in this video, I'll explain all of the details. The real estate industry has been eagerly awaiting further details about President Joe Biden's proposed first-time homebuyer tax credit, which originally featured a max of $15,000 per buyer towards their down payment on a home. The House Financial Services Committee recently released the latest draft of the proposal called the Down Payment Toward Equity Act of 2021. A lot of words. The first note of significance, the proposal comes in the form of a grant rather than being structured as a tax break or refund. If recently introduced first-time buyers legislation were to be enacted as written, about 4.37 million people, roughly 10% of the nation's renters, could be eligible for up to $25,000 in down payment assistance. If that is you, smash the like button and let me know. The online giant Zillow released a report in March finding that a $15,000 tax credit would cover the entire down payment for homes in 40 of the 50 largest U.S. metropolitan areas. The company found that with a 3.5% down payment on a 30-year mortgage with a 3% interest rate, very standard in terms for today's home buyers, about 9.3 million renters in the U.S., or roughly 27%, would spend less than a third of their income on the monthly payment for the median home sold in their area in 2022. In other words, if you qualified for this down payment assistance program, you could be spending less than 1/3 of your income on your monthly mortgage payments, leaving you with 70% of your remaining income to spend as you please. So the big question, how do I qualify? While the grant is for first-time home buyers, those who have not owned a home in 3 years may be eligible. Even home buyers receiving assistance from federal, state, local, private, or nonprofit sources may still be able to receive the grant. Grantees must meet income requirements and qualify as first-generation home buyers. This means they are individuals whose parents have never owned their own home during the home buyer's lifetime, or previously owned a home during the home buyer's lifetime but lost the home to foreclosure, short sale, or deed in lieu and no longer own a home. The program also limits the assistance to those who earn less than 120% of the area's median income. Here are a few additional rules. In order to receive the grant, home buyers must complete a home purchase counseling program through a HUD-approved agencies. State may also waive this condition for home buyers who meet specific HUD-approved underwriting criteria. Now, home buyers who stop occupying their home less than a year after they purchase it will need to repay the entire grant. This amount decreases by 20% for each year they lived in the home, with no penalty occurring after 5 years. The penalty would also be waived for home sellers who realize a gain on their sale that is less than the amount they owe. So let's answer the big question of where did the additional $5,000 of the $25,000 first-time homebuyer program disappear to? The Down Payment Toward Equity Act would allow first-time homebuyers, defined as those who have not owned a home in the prior 3 years, who are also first-generation home buyers, to receive up to $25,000 in down payment assistance at closing. Eligible participants would receive a baseline of $20,000 toward closing. To receive the full $25,000 down payment assistance program grant, you'll need to qualify as those in a socially and economically disadvantaged group. They would receive the full $25,000. So I'm sure you're wondering, what does that mean? Well, according to the proposed bill, socially disadvantaged individuals are defined as those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. NCSHA summary says any individual identifying as Black, Hispanic, Asian American, Native American, or any combination thereof will be presumed to meet this definition. A study conducted by the Urban Institute found that out of the potential eligible participants, 1.6 million are Black, 1.2 million are Hispanic, and 1.3 million are white. In its analysis, the Washington, D.C. based think tank defined eligible participants as renters who have not owned a home for 3 years and whose parents have not owned a home over the past 3 years. I'd love to hear your comments on the guidelines on qualifying for this first-time grant, but please keep those comments kind. So now, how can the grant be used? According to the proposal, funds must only be used to help homebuyers purchase a home. Assistance can go towards the down payment or the closing costs, or to reduce the interest rate on a mortgage. There's not currently an amount set in terms of funding. Congress will debate about the amount of funding they find acceptable for the years of 2021 through 2030. However, assistance limits are currently up to $20,000 per home buyer. If this program passes into legislation, it would be administered by the state housing finance agencies under the discretion of the Department of Housing and Urban Development. This draft is simply a kicking off point to begin discussions. To pass the grant program into law, a bill will have to make its way through the House and Congress, which could mean further revisions. Please leave a comment below. I'd love to know what you think about the qualifications and if you qualify for this program, and if you will be someone who submits an application for this when you're ready to buy a home. Thanks for watching, and please hit the like button and subscribe if you enjoyed this video.